Um, do we open up for everyone to start or?
Yes, please, Cecil. Good afternoon.
Good afternoon, Desmond.
Hi, Shasha. Good afternoon. Mr. Munjis is
Sorry?
joining, but he joined shortly. Mr. Munjis is struggling a bit with the link
Okay.
to join, but he's on standing.
I think we should wait. Desmond, what do you think?
If Joseph is not here, then we'll wait a bit.
Okay. Sorry, who's in charge of opening it up? Because I'm not sure my link allows me to do that. Yes. Good afternoon, everyone. We're just running a little behind. Please give us a few minutes while we sort out some housekeeping issues and we'll start. Thank you very much for joining. Um, Good afternoon again, everyone. Thank you so much for joining this afternoon. We apologize for the delay in starting. Welcome to today's edition of NBA-SBL Business Law Weekly. Our topic today is clawing back extraordinary FX gains, frank conversations on proposed windfall tax on banks. First of all, I'd like to say a big thank you to the NBA-SBL Banking and Finance and Taxation Committees, chaired by Mr. Desmond Ogba and Ms. Kelechi Oparacha, for putting this event together. So as a brief introduction, the federal government of Nigeria is seeking to tax realized profits from all forex transactions of banks in the 2023 to 2025 financial years through the Finance Act Amendment Bill 2024. So our discussion today is extremely timely and important considering the significant impact that this proposed tax will have on the banking sector and the broader economy. It's an honor to have you all here. We have brought together some of the brightest legal minds to discuss and dissect this significant development. Now, before we dive into the topic, I'd like to take a few seconds to introduce our esteemed speakers who bring a wealth of knowledge and diverse perspectives to this conversation. Mr. Theophilus Emua, the first speaker. Mr. Emua is a partner and head of taxation practice group at ALEX. He is widely known and acknowledged as one of Nigeria's leading tax practitioners. He regularly advises on companies' income tax, petroleum profit tax issues, corporate structures, shareholder rights, and other corporate governance issues. He is a fellow of the Chartered Institute of Taxation in Nigeria and was the vice chair of the Tax Law Review Committee of that institute. Thank you so much for joining us, Mr. Moa. Welcome.
You're welcome.
Second is Mr. Joseph Emunjeze. Mr. Emunjeze is a partner at Udo Domal and Bello Sage's Banking and Finance, Corporate Advisory, and Tax Practice Groups. His specializations include mergers and acquisitions, insolvency and corporate restructuring, foreign investment, and banking regulatory compliance. Mr. Emunjeze is a chartered tax practitioner and a member of the CITN. Welcome, sir. We're very happy to have you here today.
Thank you, Ms. Suleiman.
Yes, so today we would explore the various aspects of this proposed tax, including the objectives, the implementation, and its impact on banks and the economy as a whole. We would also look at how similar taxes have been applied in other jurisdictions, what lessons can we learn in our climate. At the end of the session, we'll throw the floor open to questions from the audience. Kindly impute any questions you have into the Q&A box, and we'll select the questions for speakers to address. I look forward to a very lively and informative conversation. So without further ado, let's begin with an overview of the windfall tax and its intended purpose. Mr. Emua, can you explain to us the key reasons behind the Nigerian government's decision to impose the windfall tax on banks' profits?
Good afternoon. Hello, everyone. When you ask what the key reasons of the government are, that's a difficult one because I don't know what the government had in mind. One might guess that they're looking to generate more tax revenue. But there are many ways to do that. You know, you can increase tax rates generally, whether VAT or income tax, but they focused on this particular industry or this particular sector. I honestly can't say what the reason was for going after only the banks. So if that's the question, I'm afraid the answer is one that you know, I don't think any of us can have. We can talk about the other consequences, but it's hard to say what their thinking was.
Understood. So just to give it maybe a general understanding to everyone here, what can you give us a broad overview of windfall taxes and how exactly it's supposed to work? When do we usually see those kinds of taxes in economies?
Okay, well, now every now and then you'll have a sector of the economy that does well because of certain events, in the wider world or the bigger economy. And some countries take the view that, in that case, while the tax that you pay on an ongoing basis is fine, when you have what we shall say good fortune, then the government should share in the good fortune. That's the thinking. So, for example, if oil prices went up and they stayed up, then some governments, not all, may take the view that, well, you were paying some tax when it was, say, $40 or $50. Now it's 100 and something dollars. We think we should get a share of, that good fortune which you are enjoying, because it is not coming to you because you have worked harder than anybody else. And that's the thinking behind it, Now, in many countries, you have rules as to, because when the windfall arises, it's being taxed after the fact, because until the year has ended, you don't realize there's been a windfall. So you're now sort of, back retroactively trying to claw back, the windfall profit of the year before, the period before. And in many countries, there are rules as to, how far back you can go, whether you can actually even have retroactive legislation, especially in countries where there is a constitution. So that's the way it works in many countries. So it's not something that is common, and it's not something that most governments want to do, because it means that businessmen cannot know that as I'm doing business today, and this is the position or the environment in which I'm doing business today, that is what I will, whatever calculations I've done for today are the calculations that will prevail. It means that you may do business today based on what you see in the environment. You see VAT is this, income tax is that, customs duty is this, and you do your calculations based on that, and you make a profit. And then somebody tells you later on that, well, yes, those were the numbers at that time, but we think that your good fortune, something else has come up and you've made more than you should have made, and therefore we're going to go back and take some of what you have made. And that's where that creates an uncertainty, and it creates a certain bad taste in the mouth of business people, which most governments try to avoid.
Thank you very much, Mr. Moore, for that. I think that was very helpful. And I like the reference to other countries. So I'll use that to frame my my next question for Mr. Emunjeze. So this policy comes at a time when, Nigeria's economy, like many other countries, is facing significant challenges. Can you tell us how this policy compares to similar measures taken by other countries, maybe also going through the same kinds of challenges? Is it an approach that is commonly used to seek, turnaround revenues in those countries?
Okay, thank you, Mr. Suleiman. Windfall tax, as the name suggests, as Mr. Amowa has accurately analyzed, has to do when companies have made significant profit, unexpected profit, as a result of either external factors that triggered activities that result in making more profit, or as a result of internal factor being the national government decision that result in making such taxes. So going back history, windfall tax was first used, or they call it a levy, was used in the United Kingdom in the early 80s, when it was first introduced in relation to energy companies and oil and gas companies operating in the North Sea, that because of the unexpected increase in the prices of crude oil, oil and gas company made significant profit, and as a result, the United Kingdom government imposed what they call a windfall levy at that time. And then since then, various other countries have adopted it. For instance, Italy earlier in the year have a policy around imposing wind tax on banks in Italy because the government increased interest rate, and then the banks also increased their interest rate to customers. And on that basis, they made interest income, but the banks, on the other hand, did not increase the interest income that they were paying to depositors in the bank. So on that basis, the Italian government imposed a tax on the excess income that the banks were making from that process. Similar things have happened in Hungary, have happened in Germany, and various other countries that have imposed this tax. Now, back to the United Kingdom again, the UK has an existing law on this windfall tax that arose as a result of two things: post-COVID and the impact on the global economy of Russia invasion of Ukraine. So as a result of various gas companies, energy companies made significant profit because of the rise in price of gases and the rest. So the United Kingdom government imposed a windfall tax on the extra income that they were making. They are making, I think, at a rate of about 25 or 30%, right? And this issue of the windfall tax was one of the major issues in the United Kingdom elections that took place earlier in July, while the previous Prime Minister Sunak that introduced this windfall tax following post-COVID and the outcome of the Russia-Ukraine war, says they were not going to increase the rate, but the Labour Party said they were going to increase the rate from the current rate to about 70%. So they are now in power. They have not done that. So what these instances have seemed to suggest is that Nigerian government is borrowing a leaf from what has happened in these various countries, and it's adopting a similar policy that those countries have adopted. But one critical difference between what the Nigerian government is trying to do and what those other governments have done, as Mr. Mowa said earlier, is that they have robust provisions of their laws that provide other incentives, other credits that the company may have the benefit of as a result of paying this tax. But here, the draft of the bill that was passed by the National Assembly awaiting presidential assent just simply say you pay a levy of 70% of your realized profit from every foreign exchange transaction, without saying any other thing in relation to what the flip side is for the banks who this tax is being sought to be imposed on. So that's a summary of the historical background in relation to what has happened in other countries vis-a-vis what is proposed to happen in Nigeria at the moment.
Thank you very much, Mr. Majeze. Just staying with you for a moment, and what would you say, you've touched on this a bit, but I wanted you to expand on this further, on the immediate financial impacts of this tax on Nigerian banks, going away from the actual, payment of the tax to the Nigerian government.
I've listened to various discussions on this point by various people who some have divergent views. But I think you have a case of two key shareholders in some of the banks. The chairman of some of the banks have said, oh, they are fine with the tax. But while the CIBN have said, no, we are not happy with it. In terms of financial impacts on the bank, I think there are some critical steps we need to take into consideration in making a determination as to what potential impact that is going to have on the banks. I think the first thing is that the unification of the exchange rate, people call it devaluation, happened in June last year. And in September last year, the central bank issued a circular that introduced additional prudential requirements for Nigerian banks to comply with in relation to their operations as a result of this government decision to harmonize the exchange rate regime in the country. And one of the prudential requirements was that banks were not permitted to use any gain they realized from their foreign exchange holdings to pay dividends to their shareholders. And then they were told by the central bank that they should hold those funds in a way that they will ensure that when or if there is any significant movement in the foreign exchange market, that they have a sufficient buffer that will enable them to absorb any shock that may arise, which is assuming Naira gains increases in
Stronger.
value,
Yeah.
yes, gets stronger than it was, then the bank wouldn't have sufficient buffer to discharge any of their obligations. And also, the central bank recognized that the bank, in addition to the quote-unquote gains that they are making from the policy, the banks also have their own foreign currency liabilities that they have incurred at the time when official exchange rate was 450, 460. And then when they are going to discharge those FX liability, they are then going to be buying at the end of 2023 at about 900. Today at over 1,500 exchange. So which means the bank will need more Naira to settle their foreign currency obligations. So the financial impact on the banks, I think it's going to be significant in a way that first, it is going to have an impact on banks' single obligor limit. Because if the banks are eventually pay these stars, which means the payment is going to result in their shareholder funds on impaired by losses reducing drastically. And then another impact is going to also have, it could also have an impact on the bank's capital adequacy ratio. So the bank, because these funds, they are not used to pay dividends, they certainly have to recognize it as part of their retained earning, which goes to their shareholder fund on impaired by losses. And those funds are calculated as part of the bank's capital adequacy ratio. So if the law is assented by the president and it becomes effective, then the banks have to take from these funds that they have already set aside based on their audited financial statement for 2023 and used to pay government between now and year end. So in numbers, I don't know what the numbers will be, but I think it is speculations is that it's going to result in about 1.5 trillion Naira going out from the bank to the government. But whether it will be the exact amount to be lower or higher, I think it's difficult to tell at the moment until the real financials are done.
Yeah. Joseph, I don't know if I can come in here. Yeah,
yes, please.
I hear you on CBN asking them to sort of ring fence those funds. I think in addition, CBN had said that the bank's capital requirements should go up, and they could not use those funds to, beef up their capital. In other words, they needed new money from anywhere except these dollars to increase their capital, shareholders, funds. So whether they would, they can use this as you have described. I think both CBN and the federal government is saying this pool of money, you can't use it in any way, and we're going to take it from you. It's as simple as that.
Yes. Mr. Bo, you're right. The point I was trying to make, the central bank, based on the current ongoing capital exercise for the banks, does not allow the bank to use their retained earnings from whatever source as part of the capital requirements.
Increase, yeah.
So they're only required to do it by way of either share premium or
new money.
Yeah, new money. But that doesn't change the fact that the funds represent part of the bank shareholder funds. It is just that it will not be counted as part of the capital for the bank for this capital raising, but it remains the shareholder funds of the bank for other regulatory capital purposes.
Yeah.
And it's interesting that you both mentioned this because, you know, that's really one of the things that are burning in the banking sector currently. Most people that don't meet up to the threshold are in various talks with lenders and so on. What do you, in what ways have, in your experience, banks been trying to adjust their operations in order to accommodate whatever all the, you know, significant effects and impacts that it looks like this tax is going to have on their operations? That question is for both of you. Mr. Emunjeze, you can start.
Okay. Let me get the question clearly. Is the question in relation to what the bank should be doing
what the bank should be doing in light of the you know, points that you've raised, especially in relation to capital raising, and how have the banks begun to adjust their operations in order to accommodate for these issues?
I think for the banks, really, I'm not sure what the banks are currently. I know they are. I was reading a report that they plan to meet the president. I think they are pushing in the background to see what they can do to get either reduce what the government is seeking to levy on them, or maybe quash the whole thing completely, because the bank are going to have a lot of challenges. For instance, they have had their audited financial result for 2023 already audited, filed, and they've paid their taxes.
Absolutely.
Yeah, that's the first thing. Two, it is unclear from what the government is seeking to do, because the bank already paid their company's income tax and education tax at aggregate of 33% for that year. And then this has not said anything in relation to whether that will take into account the tax already paid, and then they pay the difference, or whether this is completely on top of, whether it's completely different. And nothing has also been said in relation to, are the bank now required to go and reopen their audited financial statement that have been filed, on the basis of which their financial for 2023 are based. So I think for the banks, I don't think why they will be thinking of what they will do. I don't think they will be taking any steps now, because I think they will probably wait for the law to pass. Maybe there changes may be made to the law to introduce provisions that would address some of the challenges that have been raised in relation to implementation.
Yeah.
Because as it is, I don't think it is going to be very easy to implement the way the law is currently is, because there's really nothing in the law now other than just the levy and the penalty.
Agreed. I wanted to also know, I wondered, so let's imagine a situation where this law is passed as is, with all the flaws which you've highlighted and a number of people have also mentioned. What do you foresee as the long-term effects on the banking sector as a result of this?
Interestingly, I was talking to a friend yesterday, quite enlightening, and then we spoke earlier in the year. He was telling me I'm going to invest in ABC banks. When we spoke yesterday, he told me no, he's not going to invest again. Yeah, that he's going to wait, because there's currently regulatory uncertainty in relation to the profitability of the bank going forward, because the bill sent to the National Assembly was for 2023.
Yes.
But they have, in their wisdom, quote unquote, added 24 and 2025. Right, that is one. And some of the banks are currently in the market raising capital.
Yes.
And this is a major distraction to that, because it's unlikely that those capital raising may succeed the way that the banks will hope for them, because people are going to be asking, particularly for foreign investors. Because one thing in relation to taxation is that tax has to be settled. There has to be certainty in relation to tax, right? This has created a level of uncertainty in relation to whether this is going to be the approach going forward, that at any point that, there's something that happened and company makes a gain, then the government is going to say, let's do it what we did in 2023, because they will set a precedent if it becomes law. And two, this also goes against the grain of the national tax policy. Because if you remember, last year, the previous government, on the eve of his departure, signed the Finance Act into law. And that act was supposed to take effect immediately. And then the new president came and said, no, because the national tax policy says we have to give taxpayer 90 days notice,
Yes.
then defer the implementation of that law
Yes.
up to September by giving the 90 days. But
Yes.
this is going to do something contrary to what the government policy was in June last year. So it's a difficult one for everyone, particularly for the bank, and I feel for the banks, honestly.
Yeah, but Joseph, they could
Absolutely.
simply say they'll implement it from November. That'll give you 3 months from August.
Which is still going to operate effectively anyway. Thank you, Ms. Emujeze. Ms. Emu, I'm coming to you. I liked that point that Ms. Emujeze just made about setting a precedent. It was going to build my next question for you. Is there that kind of thinking in the market, and what do you think the effect of that kind of thinking would be on the Nigerian economy as a whole, where people and investors are even looking at the banks and thinking this is supposed to be a stable economy, this is supposed to be a stable sector in that economy, and if the government can decide to do this, is this setting the stage for what's coming, especially since this is a relatively new administration?
Yeah, well, I mean, you make a good point. I mean, we talk about things like the rule of law and how it impacts investor attitude. I mean, governments go about, every now and then you see a governor saying he's traveling to go and look for foreign investments, or you see, the head of state going to look for foreign investments, and you ask your question. The question is, what do you do to attract foreign investment? Some people think, oh, you give them tax incentives and breaks and things like that. But increasingly, people are coming to the view that what is most attractive to investors, probably more than a tax incentive, is the predictability of your environment.
Absolutely, yes.
You see, that if they see an environment where the rule of law is not followed, where I may have an agreement or a contract today, especially a contract with the government, and tomorrow the government can say, no, we're not going ahead with you, and there's no recourse, no remedy for me, then I don't want to invest in that place. Even if they give me a 100% tax exemption, I could still lose my whole capital investment.
Yeah, by that changing at any time.
Yeah. So the investment, the tax exemption is worthless. You see, and this is what the government needs to balance. I mean, Joseph mentioned countries where they had introduced windfall taxes, and you'll find that in those countries, they often will discuss it, beforehand. So in Britain, it will go to Parliament, they'll discuss it. In fact, quite often, if they start a discussion in May, when they finish and they pass the law in August, they'll say, well, we're discussing since May, so you should have held on until we finished in August. So they can make it effective from May when they start the discussion, which is, not so bad, But here is a case where there was no prior discussion. They wake up in June, July and say, yeah, you people made too much money in 2023 and want to take it back. So that it's not quite the same. Yes, they've done windfall taxes in some of those countries, but you see that there is also there's public sentiment in its favor, and they see that, oh yes, the public is, because look at the one to do with the energy crisis when the Russia-Ukraine war started. The public was complaining because they're paying energy bills that were higher. So the government saw that, oh, the public is in favor of this, so let's go ahead. So you gauge the public mood and say, oh, the public. So the public feels that, oh, look, as a government, we're trying to do something for you. In fact, when the government introduced those taxes, they used it to provide, consumers with rebates. Yes. So yes, the tax, the gas price you're paying will give you a discount. We'll pay some of it for you, but the money to pay for it was coming from this windfall tax. So they were, you can see how they're managing public, a perception and manage everybody's view of the economy. But this one, I don't quite see that happening. The money is going to be taken, but it's not clear what should happen to it. If they had said, okay, these funds, you now have extra money which you didn't expect, we will ask you to use that money and lend it to particular sectors which need funds at lower than market interest rates, for example. I mean, there was a time, 15, 20 years ago, each bank was meant to have a certain amount of money set aside for SME funding, if you remember. And so they had to put aside a certain percentage of their profits, which were meant to lend to SMEs, small and medium scale enterprises. So if you do something like that, maybe people might say, okay, well, yes, on the one hand, but it's like robbing Peter to pay Paul. So maybe we don't mind. Yes, you take it from those who have to give those who don't have. But here, they're taking from those who have, but not giving to anybody else, and that creates, But going back to your question, yeah, it does create, investor nervousness as to how predictable is your environment.
Thank you, Mr. Emua. I'd like to probe that further because I like a point that you made in relation to how persons who use that sector would even fare. Mr. Emujeze, I would like to hear your thoughts on how you believe this tax would affect customers and businesses that rely on banking services. What's the likely impact? Is there something that should be highlighted in that regard?
I think it certainly could result in the banks reduce their lending, reduce their lending. That's one. That's a likely possibility. That's likely to happen, and also it could it could also result in loss of confidence in the banking system, as Mr. Emua has explained. For customers, for the banks, I think the borrowers probably have more impact in relation to bank ability to lend to borrowers and ability to lend to reflate the economy, ability to support the key sectors of the economy may be hampered if the government goes ahead with this. But for bank customers, their account holders and who do businesses with the bank, I think the good thing for them is that the charges by the banks are regulated by the central bank. And then the banks cannot on their own decide to say, oh, we are increasing our rate for A, B, or C. So those are regulated. The bank can easily do that. So it will have minimal impact on customers. But it could have impact on borrowers. It will have impact on the economy, and certainly it will have impact on shareholders, because shareholders are already complaining that our bank have made this bumper profit, and we are not getting a share of it, and that is a disincentive to investing in banks. So overall, the more impact will be on borrowers and on the economy at large.
Agreed, sir. I want to now go to the regulatory issues, because we've talked about how the thinking and the objectives of this law. We've highlighted some of the challenges, but I like what you said earlier, Mr. Munjeze. You said the implementation of this law is probably going to be the most difficult part of the law itself, if it is eventually passed. So we'll go to the regulatory issues. What do you think? Are there any challenges or maybe even opportunities that this tax may present for the government and also for the taxpayers, being the Nigerian banks?
I think your opportunity for the government, is that government gets more money.
Of course.
So, because if you look at the president, I think last week, the National Assembly approved an extra budget of about 6.2 trillion naira, and the underlying revenue source for that extra funding, it's this levy that is being sought to be imposed on banks. So that is going to result in the federal government earning more money. right? Federal government any more money, that 6.5, that 6 trillion additional budget was also stated to accommodate the new minimum wage. So the question is, why this presents an opportunity for the government in 2024, if it says true, the banks are not going to have this bumper profit in 2025, even though the law seeks to cover it. That is not going to likely to happen. So does it mean that the government will then go and look for who else to impose windfall tax on? So that's on the part of the government. Opportunities for players in the private sector, I cannot think of any. Because government will pay salary, will increase the minimum wage.
Yes.
Workers now have disposable income, so they are able to purchase more items that will reflate the economy. More activity will be happening in the economy. But with or without this levy, that was also going to be the case. I think the only difference is that if the government doesn't have another source of revenue, it didn't have to resort to borrowing, either through the capital market or external borrowing to pay this minimum wage. And then, so head or tail, government will pay the minimum wage. So that is why I don't see whether if it doesn't go ahead, it's not going to have any major impact on the economy. Two, for the banks, the banks, why the central bank doesn't allow them to use to pay dividends, it doesn't allow them to use it to recapitalize the bank as part of the share capital by issuing bonus shares. Apologies. By issuing bonus shares, the bank will certainly have the funds as part of their retained earnings, and that retained earning, whenever unless the law changes today, retained earnings that have already been subject to tax will not be liable to any subsequent tax whenever it is declared as dividend to the shareholders. So the banks are then able to hold these funds if the government doesn't take it from them. I use the word take guardedly. Doesn't take it from them. They're able to hold it for the next 4 or 5 years. If the economy improves, the shareholders then get a good dividend from retained earnings that have been carried forward for 2, 3, 4, 5 years, depending on whatever happens. But if it is taken by the government and spent now, the shareholders suffered a loss in that regard. Because I hear the argument say, oh, the bank didn't really earn the money. But you can't say the bank didn't earn the money, because if it had been the other way around, the bank has suffered a loss. They would have suffered a loss. The shareholder have suffered.
And there would have been no compensation. There
would have been, well, some will say there's compensation because losses are liable. They are liable
to be deductions.
But it will not be the same way it would have been with the gains that the bank have made. So so that's how I see it playing out in the economy, because whichever way the economy will move on with the new minimum wage, whether the government pays it from with this levy or with funds borrowed from internal or external sources.
Thank you very much, Mr.
But Joseph, if I may just make a quick point here. I mean, the government's revenue in Naira since the middle of last year has doubled or trebled.
Yeah.
So the ability to pay this minimum wage, which is only essentially double the old rate, should have been something that they could easily accommodate, if you see what I mean. So to say that unless they get this extra 6 trillion, they can't pay it is what I struggle with.
Yeah, if you look at the government projected revenue for the year, you'll see that the projected revenue for the year, I think, is about 16 trillion, right? And then the initial budget was about 28 trillion, which means you have a deficit of about 12, 13 trillion.
Yeah.
The government was going to source either through borrowing, sale of national assets, or from other sources. So they have not factored in that earlier budget this issue of minimum wage. And now they are now trying to factor it in they see that they will need money from extra sources to be able to pay the minimum wage this year and probably next year. I think that is how they are looking at it. They are not looking at it on a going forward basis. Because if they do, they will see that this thing they want to do in the long run is not going to help help the government in that regard. Yeah.
I see what you're saying. I mean, what I'm wondering is they saw an increase in revenue from last year.
Yeah.
And they then plan to spend everything plus more, and that's that's sort of that is where the problem is, because if as any business person will know, if you have a good year, you will say to yourself, okay, let me keep some money aside for a bad year. You don't say, oh, let me spend everything plus more, which is what I see as part of the problem.
Yeah. I think what the government will tell you in that regard, they will tell you, oh yes, we made more money, but remember, we have FS obligations.
Service loans.
That the naira will need to service those foreign currency obligations have also increased. That is why I was trying to make a sense when I listened to the Minister of Minister of Finance last week, and President retreated it on Sunday, that the debt service ratio against revenue had dropped from 19% to 68%. But I don't know how they have done that, whether there's something that they are currently not doing, or that they are kicking the ball down the road.
Yeah.
So I think there are so many things that are unclear yet at the moment.
Yeah.
Thank you very much, both of you, for that. I would like to now go to the retrospective provisions that are contained in this legislation. Mr. Mua, can you talk to us about that? Can this tax apply retrospectively?
Well, I mean, technically it can, but it's not something that is supposed to be done without careful thought. Because when you start doing retrospective legislation, then you're tending towards expropriation and things like that, and those things are discouraged, but there are public interest reasons that allow it in certain cases, and you have to decide whether that threshold has been met.
Thank you very much, Mr. Mua. I'd like to also, go on, and Mr. Emujeze, please, you can contribute to this. We had talked about this earlier. What's the, practicality in that application? Because as we've said earlier, banks have already filed their returns. And the law doesn't clarify exactly how the law should, this tax should be paid. Is this a top-up tax? Does this, acknowledge the tax has already been paid? Is there going to be supplemental returns, or are people going to be amending the returns that they already filed? What are your thoughts in relation to this? Even recognizing the fact that the law is not very helpful in relation to providing those answers. Yes, this question is for both of you. Mr. Mua, you can start.
Oh, I see. Okay. Sorry.
Okay. Go ahead, Mr. Mua. Sorry, I was talking. I didn't know.
Were you speaking? Oh, and you were. Okay, please go on, Mr. Emujeze.
Sorry.
Yeah. No worries at all.
Yeah, so I agree with Mr. Mua that the law can be retroactive, subject leaving aside all the other issues that we have discussed in relation to the law. I think what cannot be retroactive is the penalty provision of the law, because the constitution is clear that you cannot have retroactive criminal law. So I don't know how that will go to play out. I'm sure they are going to be saying, oh, but the criminal sanction will not take effect from the 1st of January as they have done, but you take effect from if a person fails to comply with the law, then that is when the penalty will be imposed. Now, to the question that you have asked in relation to what can be done, if the law is passed the way it is, I think it will behold on the Financial Reporting Council of Nigeria. We need to issue policy direction to the banks on what the bank should do. Are they going to reopen their audited financials to reassess this tax and determine how much is payable? If they do, are they going to file? Are they going to file? Revised audited statement, or they file supplementary audited report? What is going to happen? What will be the role of the central bank? Because the central banks cannot release their audited financial without it being approved by the central bank. There also have to be clarity in that regard. Now, if the bank go ahead and make this payment, right, and it has an impact on the regulatory capital, for instance, in relation to it will affect their shareholders' fund on impaired by losses, and then which then means that their single obligor limit will be reduced, and it then means that they may have exposures that have exceeded their single obligor limit. So central bank will need to give them a forbearance in that regard. Assume a bank pays it and it affects the bank capital adequacy ratio. What would the bank do? Central bank need to give the bank forbearance in that regard. At the Corporate Affairs Commission, where the bank would have filed, I think most of them have had their AGM. So once you had your AGM, after 40 days, you are required to file your annual returns. So banks would have filed their annual returns. They are going to revisit that one and refile the annual. So there's a lot of things that need to be done, to be put in place for banks to be able to comply with this law if it becomes an act of National Assembly with minimal challenges. Otherwise, if those things are not done, there may be regulatory implications for the bank themselves as against the central bank, with the FROCN, with the CAC, and as the case and any other entity that it may apply to. And then in relation to for the bank that are publicly listed entities, they file various returns with the SEC as well. They file the first quarter return, second quarter, half year, and full year return with the SEC. They are also going to be revisiting all those reports that they have filed with the SEC. So there are a whole lot of things that will be taken into account if this becomes law.
Thank you, Mr. Mujeze. Mr. Muga, do you want to contribute to that?
Well, I agree with Joseph. These various consequences will arise. The filings that have already been done may have to be, revisited. But I suppose each regulator will recognize the fact that this is being done because of the law. It's not because the taxpayer or the company involved had committed, an error in the previous filing or what have you. Right. So it may not. The usual penalties we would have applied should not apply in this case. So that's what.
Thank you, Mr. Emuwa. There's something else I wanted to query in relation to the penalties, which is the provision relating to imprisonment of principal officers for a period not more than 3 months, and the curious phrasing, which doesn't allow it as an option, but rather just says "and" as part of the penalties that are going to be imposed on non-compliant banks. Can you speak to us about that? What's the strength of this provision in your view? And
Well, non-payment of tax actually can lead to imprisonment in many countries. It's just that the tax authorities usually do not press for that. Because they may take the view that, look, why send this person to jail? We've collected the taxes which he owed. We want him to go back into business and keep making more money so we can tax more. I'll give you a few examples. In Spain, the top footballers were involved in a scheme for many years. And when the Spanish tax authorities cottoned on to this scheme, they decided that they will charge these people for tax fraud. And when I say top footballer, I'm talking about Leo Messi, Ronaldo. They were all found guilty. They were actually given suspended sentences. And when you're given a suspended sentence, when the sentence is less than a year or two in Spain, it will take it as a suspended sentence. So that way they can go back to playing football, making more money than the Spanish government can tax. But what had happened was they were selling their image rights to special purpose vehicles in, somewhere in the Caribbean. And if, for example, they had a Nike endorsement or Coca-Cola endorsement or Pepsi-Cola, the money we paid to that entity, not to them in Spain. Whereas every week they're playing football in Spain. So the Spanish authority said, this doesn't look right. You're not, that country that is receiving this money, when did you last visit it? Probably never. So how come your image is worth more in that country than in Spain? That this is just an avoidance scheme. And the authorities were successful in court. And so each of them actually got convicted. But they didn't do jail time because the sentences were short sentences. So it's not unknown to have to go to jail for tax fraud, but it's not something that most tax authorities will press. The big Chicago mafia man was convicted of tax evasion, and he went to jail for that. They couldn't get him on anything else, including whether it was, whether So that's it is done, but whether it should be done in a case like this is what I worry about.
Yeah. Just to add to what Mr. Moa said, that penalty provision, right? What the National Assembly has not done is that they have not separated the civil provision, when we use that expression, that imposed the levy from the penalty provision, in saying the commencement date of the law is 1st January 2024. So what that means is that penalty provision is also commencing from 1st January 2024, which is retroactive.
Yeah.
So if a person is charged based on that provision and say you have not filed, you have breached this provision, and therefore you are, I think, challenge the court and say this provision is unconstitutional because it's contrary to the Constitution that says criminal laws cannot be retroactive. So I don't think it will matter that the person didn't file the return, say, in September, because the law says this penalty provision is retroactive. And I don't think the Nigerian court will allow that provision to stick as it is, unless the National Assembly goes back and amend the law and say Section S commence 1st January and Section Y commence this. Other than that, I don't see the court upholding that penalty provision against any policy that may be in breach of the provisions of the law if it becomes law eventually.
I agree. Thank you for that, Mr. Emunjese. I wanted to know, what alternatives, this has plagued me for a while, what alternatives do you think to the windfall tax, do you think the government would have adopted to achieve similar objectives? Of course, we know that the singular objective still remains, driving revenue, or the main primary objective remains driving revenue. But is there any other thing that you believe they could have done, or options maybe they should have considered from a policy point of view?
In relation to the gains that the banks have made?
In relation to as an alternative to the windfall tax.
To raise more money.
To raise more money. I think what the government should have done, they are doing it. I think for the past few years, we have been crude oil, BPD, barrel per day have been hovering between 1 million and 1.2 million. The president did announce on Sunday that they have increased it to 1.7 million barrels per day. And then he has also mandated the NNPC that by the end of the year, they have to increase it to a minimum of 2 million barrels per day. So I think that's a step in the right direction. Government says they're not paying subsidies again on petroleum product, but you and I know that is not true, because if you were to go by international prices of product, you'll see that petrol should not be selling at 650, 700 naira in Lagos. It should be over 1,000 naira. So somebody is picking up that subsidy. Good. The governments have agreed to supply Dangote refinery crude oil in naira. Hopefully, if that refinery becomes operational and supplies product to the local market, that could help that could help reduce pressure on the government expenditure on petroleum resources, so that we give them more money. Government had an incentive to seek and ensure that the government refineries work, if they will work, and if those work, that will remove pressure on government. And then one key thing which the president didn't address on Sunday, which I think he should have addressed, is the cost of governance. Where we sit, looking at government, looking at what government officials do, from the top person to the lowest person, political appointees, the government expenditure is too huge, it's humongous. So that needs to cut. And if that is cut, then government will be able to have sufficient savings from that cut that will help you to finance most of these things that the government is doing.
And possibly even increase trust in the system.
Yeah, that also increase
Correct.
trust in the system. And then in addition to doing that, government should not be creating additional institutions. Government should not create additional institutions. Last week, you were seeking to tax the banks, but you created Northwest Development Commission. You created Southeast Development Commission. The Southwest Development Commission is the beast before the National Assembly. The North Central, they have their own before the National Assembly. So, and then earlier in the year, the government said you were going to implement the Oronsaya report that required that you prune down government agencies to manageable level, and then you are creating new agencies. So there's a misalignment between government saying we need more money and what government is doing with the little money that they have. So there are a lot they can do to earn more money instead of looking to this easy way of getting funds to finance a year's budget, and that easy way will not be available for subsequent years.
Thank you very much. Mr. Muga, would you like to contribute to that?
Yes, I mean, there are steps that can be taken in the short run, some of which Joseph has mentioned. There are also steps that can be taken in the long run. My view has always been that you tax prosperity. In other words, create an environment that enables more people to do business and make profits, and then you tax those profits. But right now, the population of people making profits or doing business is not growing. Some might say it is shrinking, and yet you want to increase taxation of the remaining few. And to me, that is not the way it should go. You should find a way of enabling more people to go into business, to stay in business, and then in 2-3 years' time, you have twice as many people to tax, and you make twice as much money. So that's my view. I mean, what they're doing to the banks, fine. They want to make extra money from the extra profits the banks made last year. But again, how, if you really wanted to help the economy, those funds should have been used to, directed to areas of the economy that need funding. Right now, there are many areas of the economy that need funding, and they can't get it. And with interest rates at 30% or, what have you, it's impossible. So the small scale businesses cannot survive. And they employ more people, more labor than anybody else.
Yes.
So again, as Joseph said, you have to align the different philosophies. If you can't do one thing with the right hand and do the opposite with the left hand, then really won't get to our destination.
Stay in one place. Thank you very much.
Or move backwards.
Or move backwards.
Yeah.
Thank you very, very much. I am very grateful for our conversation so far. I think this has been very enlightening. I've learned quite a lot, and I think we've done a lot of justice to the issues. I've gone through the questions from the audience, and I think some of them have been answered during the conversation, but I would still go through them just so for completeness. So Felix asked, I have a concern about the rate of the tax. Don't you think that 70% tax on the income amounts to expropriation? We can, either you or Mr. Mujeze can answer that, Mr. Moon.
Well, they want to take everything. So, I mean, the first proposal was 50%.
Yes.
And somebody decided that, look, well, why take only 50?
It's not enough.
It's not enough. Joseph, I don't know what you think.
Yeah, I think, yeah, I think it's a lawful way of expropriating other people's money because those money belongs to the shareholders,
Yeah.
Yes.
and the government seeking to take it 70%. I don't think it's fair. It's not equitable.
Yeah.
Because when the shareholders were making losses in
Yep.
some of the banks, you didn't come to their rescue.
Yeah.
Now they have opportunity of at least getting something based on the shares they have been holding in the bank, then you are not allowed them to get it and you want to take it away almost entirely. So I don't think it's fair.
Agreed. So the next question is from Vivian. How can we design a windfall tax on banks that is complemented by an alternative tax? By an alternative tax measure to support sectors adversely affected by the factors contributing to these large gains, ensuring that the government is not merely exploiting windfalls for its own benefit, but also addressing the broader economic impact on other industries. I believe we sort of addressed this when we talked about examples from other economies where that money is plowed to the sectors in need or the people in need. But I don't know if you wanted to add anything to that.
Well, on the one hand, the banks made money from the exchange rates adjustment, but there are companies which lost money as a result of the same thing.
Yeah.
And they're booking big losses because they now have to pay off loans at a higher naira value. So you've got two parts of the economy. One gained from it, one lost by it. If there was some way of bringing the two together to say, okay, you made a lot from it, these people lost. Let's take some of yours and give to them so that they survive. Because some of those companies are even saying that they can't survive in Nigeria anymore.
Yeah.
So so those are things that they should be looking at. The whole economy as a whole. So just looking at where we can grab and not look at the places that need help.
Agreed. Thank you. So the next question, sorry, Mr. Munjose, you had a comment?
No, I want to say that, yeah, that's true. Government could have, because several of those manufacturing companies have their share capital wipe off. By the exposure to FS obligations. Another thing the government could have done is to say, okay, these funds, if we get it, it's not going to be used for recurrent expenditure. We are going to tie it to ABC projects. And then people can see, yeah, this is what will be done with the project, and if actually executed, people are going to say, okay, this is what we got when this thing happened. And that could have also assuage people's feeling and saying, oh, there's hunger in the land, but that's okay, the government got money from it and they're able to do ABC for us. That enables me to live here and go to Benin in less than 3 hours. I'll be happy. I can travel at night freely on a smooth road without stopping. People will be happy on those things, but that is not what the government want to do. It's essentially for recurrent expenditure, which doesn't help anybody.
Yes. So the next question is from Monwan Edwin. One of the guiding principles of taxation, as outlined in national tax policy, is that taxes must be fair, equitable, and devoid of discrimination. Do you think that the windfall tax is discriminatory, since the banks were not the only sector that benefited from the gains?
I think almost everybody that had living outside the manufacturing company have exposed to FS liabilities, and those ones who essentially lost. People that have funds in their DOM account that they need to convert, or they make a gain. So if the government wants to apply to everybody, they could have said, oh, anybody that have funds without dollars or any of foreign currency without exposure to any foreign currency obligations, then any gain you make from it, realize you pay a tax on it, but that would be difficult to implement. Discrimination. I don't think I would describe it as discriminatory against the banks, because this is not new in relation to imposing a particular tax on one sector or the other. Because, for instance, you have the NIDA levy
Yeah.
that is payable by a few companies. And there are some other levies also that are payable by certain institutions. It's not paid by everybody. So this one is just on the banks. I will not say, if it has said, oh, this is imposed on bank A and not imposed on bank B, then that would be discriminatory. But this applies to the banks generally, every of the banks that have made a gain. I think the only difference is that some made more gains than others. So that is just it, but it's not, I don't think I can describe it as discriminatory in the strict sense of the word discrimination.
I think the next question by Kechi Chuku has been addressed somewhat. The first one relates to whether criminal laws can be applied retroactively. I think Mr. Emua and Mr. Emujeze have addressed this with even providing a recommendation in relation to, you know, the drafting of that particular penalty provision. So I don't think we need to go into that. The next one also, I think we've addressed, but I'll still read out. It says, what legal redress is available for targeted tax legislation? Because the banking sector was not the only sector positively impacted by currency revaluation. However, this legislation applies to banks and does not extend to other financial institutions and other industries that hedged FX. I know you've talked about this before, both you and Mr. Emua, but if you have anything else to add to that, vis-a-vis the mention of financial institutions.
I think what the bank could have done in an ideal world is to challenge the process of passing the law in court. But the banks are regulated by the central bank, and no bank wants to take on the government.
No, that's not a wise move. Okay, so Kamal Raji has a question from Mr. Emua. Can you consider the angle of the FIRS, which says that the Forex windfall gains affected other sectors of the economy, revenue, and income? As such, FIRS had lost the opportunity to tax the affected sector because of the Forex gain of the banks, thus making them vulnerable to windfall tax in order to make up for the FIRS revenue projection shortfall for the year in question.
Okay, if I understand him correctly, what he's saying is that, for example, the manufacturers lost money because of the exchange rate adjustment, and therefore the FIRS is receiving less tax revenue from
income from them
from that sector.
Yes,
and they're trying to make up for that loss by
going to the person
who made more money.
Yes.
Well, I suppose that is probably one way to look at the thinking behind this legislation. But again, my point is that they should have looked at how to use this, sector that's doing well to help the sector that's not doing so well. That's probably more beneficial to the economy as a whole, rather than just putting it in government pockets. And as Joseph said, they're not using it for particular projects. So it just goes into recurrent expenditure.
So another question says, and I believe this has been answered in the course of the conversation. Does the retroactivity of the law send a wrong message to foreign investors? Mr. Emua, you addressed that earlier.
Correct.
Yes. Another question says, what is your position on the obvious exclusion of some allowable deductions from the windfall tax? I think Mr. Emua, you can start. If Mr. Emujeze has anything to add, we can.
Yeah. Well, I don't know that the law has been made very clear as to what is deductible and what is not deductible.
Yeah, the manner of
probably in the haste to pass legislation, they have not gotten the draftspeople to do a proper job. In fact, another point that we miss is that they are amending the 2023 Finance Act and calling that the Principal Act, whereas what you're meant to do is to refer to either the Companies Income Tax Act or Capital Gains Tax Act.
Absolutely.
That is what with the Principal Act.
Yes.
So they're not amending any particular part of CETA or CGTA or PBTA. They could simply have called it 2024
Finance
Bill. Windfall tax, exactly.
Yeah.
And not even have referred to 2023 at all.
Yes. Agreed.
There's no need to.
Yeah. I'll go to Mr. Emunjeze for this question. It says, what options are available to shareholders of some banks who are in disagreement with this entire tax appropriation scheme of the government, considering that the political exposure of the banks and their significant shareholders makes both parties unlikely to seek redress?
I think the first thing, because when the question is usually asked and say, oh, what can we go to court? I think the question is not, can you go to court? The shareholders can go to court, but will they succeed in action in court? Doubtful. Doubtful in the sense that, because I think Nigerian courts generally lean towards the Nigerian government having more money to spend, because I think there's a court of appeal decision on that point where I think the Ilorin division decided that the government must have enough revenue to be in affluence or something of that nature. And then the issue of low cost will also come in. I think as the shareholder, yes, you are a shareholder in the bank, but do you have a low cost to bring this action in court? Is the action premature? Can you stop the National Assembly from making laws? You can't stop the National Assembly from making laws. What you can do is, I think if the law becomes law, the best part you can challenge will be in relation to this penalty provision. Yeah, but the position on the levy and action against it is unlikely to. I don't think it's likely to succeed. Looking at our various laws, I think it's unlikely to succeed in court.
Okay, still with you, Mr. Emunjeze. What was the nexus between CBN's position on the windfall being stored up as a buffer for possible future FX shocks on the one hand, and the CBN's position that the old FX regime that would necessitate these swings was essentially done away with?
Really, the question again. Let me try to capture it properly.
Yeah, the second part of the question is not very clear. What was the nexus between the CBN's position on the windfall being stored up as a buffer and the CBN's position that the old FX regime that could, I guess maybe necessitate is not the right word, but that could cause these swings was essentially done away with?
Okay, yeah, I think the first thing to point to make is that before June 2024, our foreign exchange market was a bundle of confusion. Was a bundle of confusion with many windows, multiple rates, opportunities for arbitrage. So I don't think majority of people who are familiar with how the market was question why the central bank had to unify the exchange rate. So I don't know, many people didn't question that. Now, that unification was a good policy. That is why when it was done in June last year, the predictions by Nigerian financial institutions, including offshore financial institutions, was that the Naira was going to settle at 600.
Yes.
Right. And then nobody saw Naira trading at 1,600. And then by September last year, Naira was then trading at about 800, 850 in the official market. So now, is the central bank in cahoot? I'm looking up because somebody gave me a conspiracy theory yesterday, which I don't know whether it's true or false. But he told me that I should look at 4 scenarios. First, the central bank told the bank, your FS gains, don't pay it out at dividend. Keep it in case anything happens. And then in January this year, the central bank reiterated that position and say, keep this fund, don't touch it, right? And then in February, the central bank did something in relation to the net open position for bank and say banks can only be short in their foreign exchange position by 20% and 0% long against their shareholder funds unimpaired by losses, essentially making it difficult for banks to keep foreign currency beyond 24 hours that they don't need, right? And then by March ending, the central bank then released the capitalization circular, says go to the market, capitalize, but fresh money. Don't bonus share will not be recognized. Retained earning cannot be used to capitalize your operations. So there's this first scenario, and then after all this have been done, the government now come and say windfall tax on the money that you have warehoused. So what I tend to suggest, as the person that told me this thing said, was that it appears that the government have been
planning
for this. It's just that they probably, for one reason or the other, they didn't announce the policy when they were supposed to. If they have done this November last year, it will have the same effect, but the impact wouldn't have been the way we are looking at it now in terms of what the banks will need to do or what the bank will not need to do. So, and I have not heard anything that essentially what they cannot do openly. The central bank has said, "Oh, they are not happy with the windfall tax." I don't think they will do it. I don't think they can do it. But I think, it's the way it is.
Understood and agreed. I wouldn't say that thought has not occurred to me. So I have a question here, also something we've touched on as well, talking about what you have to say about the cases of multiple taxation on these banks. Can the banks be pushed to cutting corners and making the customers bear the effects of these charges on them?
Just say it's unlikely that the bank will not be able to. They will not be able to transfer these levies to their customers. It's unlikely because their fees are regulated. When you use your ATM, your account maintenance charge, the only thing that is not regulated, when I say regulated, quote unquote, is interest. But that interest is also regulated. It's also managed by the monetary policy rate. So there is a window within which a bank cannot come and say today, no, my interest rate is 50%. They can't do that. So they have to look at the monetary policy rate and then decide on how much interest they are going to pay. They have to decide their prime lending rate. Also, they decide their worst lending rate, the higher lending rate answer, and that probably will not be above 33%. Going by the asymmetric window around the plus or minus the monetary policy rate. So it's customers don't have anything to fear in relation to this. It's not going to have an impact on them. But whether will it have an impact on bank services in terms of you going to your ATM or going to a POS and then having drop transactions? I don't also see it having an impact on that.
Thank you. Someone made an interesting suggestion that how do you reconcile the windfall tax with the recent FIRS circular on the treatment of conversion of foreign currency cash balance as realized and considered for the purpose of computing accessible profits?
Actually, there's an interesting point there. There's in the course of everyday business, banks will have foreign currency transactions that need to be met or satisfied, which is not the same thing as a bank buying foreign currency as an asset. And I think what is happening, this law doesn't distinguish one from the other. So, for example, if a bank has lent money to you in dollars, you when it's time to pay back, you pay back, in whatever, and that they make a gain. If they give you dollars, January 2023, and you pay back in January 2024, they've made a gain, but they didn't hold dollars as an asset. Well, I think what many banks did, and that's probably what CBN was trying to attack, is they were actually trading in dollars. Which is a different sort of business from bank customer relationships based on a foreign currency or what have you. So when they hold dollars as an asset, they then realized the gain because the exchange rate doubled, and they made this bumper profit. But this law doesn't seem to distinguish one from the other, because in every year they make losses and gains on currency conversion based on the transactions. So it's not clear whether those transactions will be excluded from this 70% or not. And that's one of the points we made earlier, that the law is not clearly drafted. So it's not clear what they're trying to, whether they're catching only this or they're catching everything.
Thank you very much. I look at the time now and I see we're running out. We've gone through all the questions, I believe, and I would just like to come back to say thank you so much to our two esteemed speakers. You both have done quite a lot of justice to this topic.
You're welcome.
We've learned a lot. You've been very insightful, raised a lot of interesting perspectives, and that we'll go away with, and ones that we hope would also get to the right sectors in terms of the drafting of this law. Thank you very much. I had hoped one of the chairman of the banking and finance committee of the NBA-SBL will be able to close for us, but I don't know if it's still on, Mr. Desmond Ogba. If he's not, I would just say thank you very much for making time today. We know your time is very valuable, and we're grateful to you for sharing that with us today. Thank you, Mr. Moore.
Thank you, Sister, for reading the thanks. I was just saying thanks with a mute. Very many thanks to you, Mr. Moore, for agreeing to do this for us. We're extremely grateful.
You're welcome.
Chikwaja, who heads the tax committee, is also very, very pleased that you were able to do this. And this is a collaboration between my committee and the tax committee. And we're very grateful to you also, Joseph, for doing this. We are confident that when we invite you to come next time, you'll be more than happy to share your wealth of knowledge with us. And for you, Sesson, excellent moderation, and I can't thank you enough. For the participants, we are very grateful to you. If you were not here, it should have just been us talking to ourselves. So we're happy that you were able to make it. Thank you, everyone, and enjoy the rest of the day.
Okay.
Bye.
Thank you very much. Bye, everyone.
Okay, yeah, bye-bye.